Thank you for joining me. I'm Alex, and I want to talk about Coke today. So, Coke makes soft drinks, obviously, and they shouldn't really be affected by the current situation because the people who drink Coke generally continue to do that despite financial hardships, because in the grand scheme of things, there's not too much in savings between off-brand cola and Coke. So, with that said, I do still expect there to be an impact, and obviously with restaurants being closed that carry Coke products generally, I think that a minor impact is going to be there, but I do think that there's no major impact going to be for either growth or profit in this case. Current price is $44.54, which gives them market cap of $191 billion. And dividend yield is 3.65%, which is pretty reasonable. Payout ratio is very high with 69.4%. So obviously not too much room to grow the dividend there. And I know that Coke specifically tends to favor stock buybacks to increasing their dividend significantly. Current revenue $37 billion, which is up significantly from the previous year. Earnings $8.9 billion, up almost 30% there, which gives them PE of 19 with a forward PE of 18. So back in December, they expected slight growth in earnings over even the 8.9% that they had. Overall, I would expect that to shrink a little bit due to the current situation rather than going up even more from the $8.9 billion they had. Total assets $86 billion, total liabilities $65 billion, which gives them a total stockholders' equity of $19 billion. So things definitely going in the right direction there over the previous year. Obviously, I can't fully understand or predict the impact of the current situation, but I would expect the earnings to be quite significant even this year. I would expect the revenue to be probably down slightly, but I don't really see that as a huge problem here. Overall, with a company this stable, with safety of principle almost being a given, Coca Cola is pretty safe. Consumer behavior is kind of shifting a little bit towards more healthy drinks, but Coke also has some products there, so there might be a shift towards that doesn't hurt them as much. But overall, I would expect there to be a shift, but it's going to be slow, and it's not going to be a drastic downturn for Coke in this case. So overall, I would say that growth investors will have a problem here because I don't expect there to be significant growth over the current year. Dividend investors, I think, will like the 3.65% dividend. It's quite nice, especially for a stable company like this. The payout ratio is reasonable, so definitely an interesting stock to look into. For a value investor, I think this is a pretty good opportunity because revenue is growing, earnings are growing, the company is very steady, the PE is nice, the balance sheet is all right. And as I mentioned before, they favor stock buybacks. So your share of the company will likely continually increase while you're just holding the stock. So overall, I would say that it's a very interesting company for a value investor right now. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.